Hey guys, it's Chris Wong. I'm filming this video as of April 7th, 2025, and I'd like to talk about the biggest margin call experience in the last few days and lessons learned from it. So as a disclaimer, I'm not a financial advisor, I'm just a guy interested in building a portfolio. So when I start using margin, I actually start with more precautions at first. I made videos about how I got started on using margin, what precautions I would be taking, and then I would say over time, I tried new things. I've actually used less precautions, and I did admit I did get a bit greedy, and I actually paid a price for it. So in the last few days, we experienced market crashes, and the stock prices were lower than expected, even lower than when I started using margin and try to average down in the previous dips in the market. So I thought like the August dip was going to be one of the lowest for a while, but I did not expect the dip or the lowest crash so far to be even worse than last August or last September. In the last couple of weeks, I made the decision to stop buying funds on margin and Questrade and just let whatever funds I have left on my margin account to just pay down the margin with these high yield dividends, and then move margin more towards a Simple margin. And in the process of doing this, I thought it was starting to work, but then the market crash got worse in the last few days. So in the process of trying to settle margin call on Questrade, especially the biggest one I just experienced, I had to actually use as much money as possible from all my bank accounts. So that actually leaves me with little money until my next paycheck from work. And I also asked my wife to help me a bit. This market correction has taught me more about the precautions of using margin. It doesn't mean I'm going to stop using margin. It just means that I'm going to be more careful if I continue using margin when I go forward with Simple or when trying to pay down the margin on Questrade going forward. So one of the biggest mistakes I made when using margin is using more margin than I should have. And one of the biggest mistakes I made before when I actually used to invest in VOO or even trying QQQ or SPY was using a lot more margin due to the 20% margin requirement in Questrade. Because 20% margin requirement allows you to buy like 5 times the amount of investments compared to like 30% margin where you can actually buy like 3.33 times the amount to max out your margin. So when I decided that time when the market was starting to go down that I didn't want to have VOO, SPY, or QQQ, then I realized I was using too much margin, and due to the timing of it, I actually didn't sell it at a profit. Part of it I sold at a little bit of loss, but due to the market correction in the last few days, I'm actually glad I sold it at the time I did, because if I still held on to them today, then my margin call would have been a lot bigger. So using too much margin is a big mistake. So I would say going forward, I have to learn how to set a reasonable amount of margin. And today, I was trying to do some random calculations by actually looking at the total amount of stocks invested and then trying to figure out how much of it is equity and how much of it is liabilities. And I actually was using a concept from high school accounting from the balance sheet. Assets equals liabilities plus equity. So I was using all the stocks owned as assets. The liabilities was the margin used, and the equity is how much I was actually worth. And if I already do equity divided by assets, then that's just a ballpark estimate of how much of it is above your margin requirement. So if everything I invest in is 30%, then I want the equity divided by assets to be at least 30%. And then I was trying to figure out what would happen if the stock market dropped down 40%, because some market crashes can drop down as low as 40 or maybe a rare case 50%. So I need to consider what is the best percentage I can have of having actual equity relative to the total assets. Another mistake I made was not investing in short or inverse index-based ETFs. I used to have YQQQ, and I never actually got it again, which at that time I should have got it again in February of 2025 when the market was up. But then the last time I used YQQQ and I settled a margin call by selling YQQQ, I actually took a very small, like $20 loss. And for some reason, I didn't feel like getting it again. But it was a mistake I made by not getting it again or considering other inverse ETFs, like one by ProShares. I believe ProShares has several type of inverse-based S&P 500 or NASDAQ ETFs that does the exact opposite of the regular S&P 500 or even like a triple leverage one like UPRO. I'm actually thinking about adding inverse ETFs again in the future when the market actually picks back up, and I'm just going to compare it to like the actual S&P 500 or NASDAQ 100 index, and may consider buying again when the indexes reaches its new high, and then I'll consider buying the inverse ETFs and just average it down slowly and just not care if it goes down or brings down the portfolio value. I may consider adding inverse or short ETFs even if I'm not using margin, because if the market goes down again in the future, then I'll have something that's going to be up, and then I can consider selling it and then buy one of those index-based ETFs when it's down again and just continue building up my income. Another lesson learned about margin calls or market crashes: it can happen at the most unexpected time. Like, none of us was expecting that it was going to happen at this time, and especially when I was calling Questrade earlier today because I just had a random question for doing my own taxes, and the wait time in order to talk to customer service was more than an hour and a half, which I was actually surprised about, but then I realized it's also tax season too. And then out of curiosity, I asked the customer service agent if there were a lot of phone calls about margin calls being settled with this market crash, and the person told me yes, it was an unusual time for them as well. So anything could happen, and market crash can happen even at the busiest time of your life, or it can happen at a quiet time of your life. It can happen when things are not going well for you, or if things are going well for you and it's just an easy fix. I would say one of the best things I did for myself when considering using margin was I had Wealthsimple and Questrade, with Wealthsimple being my primary account and Questrade being my backup account. So when I actually start using margin of Questrade, at least I have my Wealthsimple as my primary account to actually build up as my primary portfolio and to actually use the dividends for my regular expenses. And then my Questrade account was just so that I don't put everything all in one brokerage account. Another lesson learned while doing my taxes, and a reminder for myself, something that I would admit that I forgot to do myself, is always put some money aside, especially when I do get dividends, either from non-register or margin account, because as a Canadian, the dividends from the USD holdings, there's withholding tax of 15%, there's foreign tax credit, but then I'm still have to pay taxes on the foreign dividends. And the one thing I kept in mind for myself is paying taxes and paying credit cards is more important than trying to pay down the margin. So I always make it a high priority, pay those two first, and then try to pay down the margin as fast as possible. If you guys liked the video, if you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.